And good day to all of you, and a very, very warm welcome to today's ICMA Forum on digitisation in the bond markets against the backdrop of COVID-19. We're delighted to see so many of you have joined us. I can see that the numbers are still rising, and in advance I'd like to thank the speakers and the panelists for their contributions. Now, a few words by way of introduction, and I think it's worth just looking back at how the markets performed during the pandemic. In March and early April, as the lockdowns came into force in many countries, the debt markets experienced immense volatility and participants were simply unable to cope with the pace of price declines in risk assets. The result was that primary market issuance ceased, secondary markets became dysfunctional, and the CP markets froze. We saw the dash for cash and liquidity became all important. Now, we all know that the catalyst for the markets reopening and subsequently functioning well was a massive coordinated central bank intervention followed by widespread fiscal stimulus. But, and it's a big but, we shouldn't forget the role of FinTech. In fact, we can honestly say that FinTech saved the day and has allowed the markets to function effectively despite the vast majority of market participants working from home. And this would have been unthinkable even 2 years ago. But we've all moved into the virtual world, and this is only possible because of FinTech, and COVID-19 continues to be an accelerant for the digitisation agenda. Financial innovation and its impact on the way the debt securities markets operate has been a long-standing focus for ICMA. In each of our core pillars of primary markets, secondary markets, repo and collateral, and sustainable finance, we see that technology solutions are ever expanding. In the primary markets, our latest review in October revealed that there were 36 different applications that can be used at different stages of the debt issuance process. And this is an increase of 50% compared to just 2 years ago. These target in particular bond syndication, workflow enhancements, and communication. And it's a similar story in the other market segments. For example, we've analyzed over 160 fintech solutions for collateral management, intraday liquidity monitoring, or other operations-related functions. We've mapped these solutions in all major market segments, and you'll find these on our website. I think that's a unique resource. But providing this type of information to the market is only one aspect of our fintech work. Another key focus is on common standards and best practices. For example, our Electronic Trading Council is focusing on defining and promoting best practices for axe distribution. And a further key objective for ICMA is to integrate repo and cash bonds into the common domain model. This project creates a digital standard for trade processing, laying the foundations for greater efficiencies in bond and repo markets, improved interoperability, and further innovation. For ICMA, engagement with the regulatory community is fundamental to our mission, both at international and national level, and this is also true in the fintech space. We're in close touch with national and international regulators and supervisors with regard to new regulation, and we're actively involved in relevant official sector working groups, such as the ECB's AMI-SECO, AMI-Pay FinTech Task Force. And our FinTech agenda is guided by ICMA's FinTech Advisory Committee, and this is chaired by Armin Peter of UBS, who will be joining us later. Set up at the beginning of this year with our members, this plays an important role in ensuring that we remain focused on the key topics of creating common and open standards, promoting straight-through processing, facilitating data exchange, and fostering the dialogue with industry stakeholders and regulators. So with that brief introduction, let's move to the rest of the forum. Now, central bank digital currency is an important topic and potentially a game changer for the industry. And I'm delighted that Ignacio Torrell, who's advisor within the Market and Integration Division at the European Central Bank, is joining us today to share the ECB's view on a digital euro. Highly topical. Ignacio leads the innovation team, which is responsible for the preparation of the digital euro project, and previously he was responsible for the evolution of Eurosystem services in the area of market infrastructures and the evolution manager for target instant payment settlement tips. So Ignacio, we very much appreciate you coming today. Very much looking forward to hearing your comments. I want to wish you all the best with this important initiative. Over to you.
Thank you very much, Martin. Thank you very much to ICMA for this opportunity to present the Digital Euro report, which the Eurosystem published at the beginning of October. And we are running a public consultation, which is open until the 12th of January. We get many questions from the securities, settlement, issuance, collateral world. How does this impact us? And my presentation today is trying to aim to answer precisely this question, which I have discussed with some of you. Should we go perhaps to the intro slide? Yes. So my presentation will consist on describing what is a digital euro as we define it here in the report, what is not a digital euro, and there is an annex in this report which sets our thoughts on wholesale CBDC. And a question which we often get is where exactly is the border between retail and wholesale CBDC? That's one I will try to answer. And then I will explain why we intend the digital euro as a complement to private initiatives and what is our way forward. In the report we explain, by the way, the why we would issue the digital euro, the what is a digital euro as we describe today, but we don't yet describe how exactly it would look like, because we need the public consultation and we need the interaction with the market for this. So let's start with the first slide. What is a digital euro? So a digital euro, this is the definition we provide, would be central bank money made available in digital form for retail use in payments by citizens and by firms. So it is the digital equivalent of a banknote effect with the intention to have the same legal tender status as banknotes has. Now, does this mean that it would replace banknotes? No, that is not our intention. Our intention is to provide central bank money in as many forms as it is practicable and usable for citizens and firms to conduct retail payments. So it's in that respect, what we try to bring there at the retail level is a costless access for citizens, for merchants, to have forms of payment with the safest possible form of money inside, which is central bank money. So if we turn to the next slide, I would show there it's a way of seeing central bank digital currency versus other forms of money and other assets, which are and other assets. So if we start from the very right, we start with crypto assets, which are not the liability of any entity. Then we have within what can be the liability of a private entity, commercial bank money and e-money, which have an assurance of value that they are convertible into central bank money, established by regulation, supported by deposit insurance. And then we have now incoming and part of the of the MiCA regulation, which is in the process of being agreed. We have some stable coins that entail some stable coins may entail a liability on an identifiable entity, others not. So that's part of what is in the new regulation. And within what is the liability of the central bank, so there has always been cash, there have always been central bank deposits. Cash has a physical form and is available to the general public. Central bank deposits have a digital form and have limited access to banks, basically. So a digital euro would be combining the general public element of cash with the digital form which central bank deposits have. We turn to the next slide. So now let's turn to wholesale central bank money, which we are not calling so under, as I defined before, digital euro as a retail form of payment. So wholesale central bank money would not be what we put under, let's say, the brand of digital euro. So in a way, wholesale reserves digital money has been available in the target services. We have target 2 for implementation of monetary policy, for the money market, but really for any form of payment in under RTGS. We have target 2 securities for security settlement against central bank money, and we have tips for instant payments. So what we say in the report is that we think it is worth studying, and this will be probably most of the use cases which can be quite relevant from a securities perspective. We will study whether there is a case for having a 24/7 availability of central bank money for wholesale transactions. So currently we have that 24/7 availability, but only for a specific kind of payments, which are instant payments. And the other element of which wholesale CBDC has is that it predicates a particular technology, that it's whether the use of a distributed infrastructure in wholesale transactions might improve efficiency, fluidity of payment systems, might facilitate use cases which are not possible today. We're also conscious that it can have a strong market impact. So in any case, it is something that we will study very, very carefully. And at this point of time, I cannot give any indication of by when we would complete such a study, because our focus now is, as you see, on digital euro. Let me turn then to the next slide, perhaps the most interesting one, I would hope. So this is the question we always get. So retail CBDC, wholesale CBDC, where is the border? So when we speak about making central bank money available to the general public, the question which has always come is, would you disintermediate banks? Do you create a risk that having large shifts from bank deposits to central bank money, because ultimately central bank money is the anchor of the currency. So a point we highlight very much in the report is that the digital euro should be designed to avoid that it is excessively used as store of value or as means of investment, precisely to avoid that risk of possible disintermediation of the banking sector, because we believe we don't want to enter as central banks into the provision of credit. That's something which the private sector allocates more efficiently. So we want to have really the minimum possible impact in terms of bank deposits. So for that, we say that we will study exactly how to do this, but we speak in the report about the possibility of making hard limits, meaning I or you would be able to hold not more than a maximum amount in digital euro, or you could also have some form of soft limits, meaning that above that amount, there would be disincentives of some kinds, typically negative interest rates. If you think in a way how we mostly use cash today, we have a certain amount of cash in our wallets. We don't have that much cash that we feel that we are at risk of losing it. So this would be the same concept. We don't want a different behavior of citizens in terms of how they regularly use cash for payments, in terms of the amounts of cash they have to make payments from the one that they would have for a digital euro. So in that respect, in a way, digital euro, the conclusion would be that it has a limited relevance precisely for that reason in the wholesale sphere. Because in a way, to put it a bit bluntly, if today you're not operating with banknotes in your business, in your regular business, the fact that banknotes would also be available in a digital form should not change per se the amount of banknotes with which we're currently operating today. Next slide, please. And I turn now a bit. I turn back to the digital euro and our report to emphasize some key messages we provide there in terms of complement to private initiatives. So we aim, as we have always had the central banks, a coexistence of several means of payments. We have never wanted cash to be a prevailing means of payment, nor do we want to position digital euro in the same way. We want to collaborate with the private sector that can always remain more innovative, create new ideas. So we don't have, as I said, the ambition neither to take away deposits from banks' balance sheets, but we also do not necessarily want to partner for providing digital euro on the front end. We also don't want to substitute payment service providers on the front end. So in that respect, we have an important statement there saying that digital euro would be offered, would be distributed preferably through supervised service providers. It's a deliberately open sentence to say that we're not considering any distributor from the private sector. We're considering supervised ones. But at this point of time, starting with the possibility of starting a project soon. We want to keep this definition as open as possible for the time being, to discuss with the market who exactly could support us better in the distribution of a digital euro. If we turn then now to my final slide, I think. What is our way forward? So towards mid next year, we will consider whether to start a digital euro project. It's not that we would launch a digital euro. The word project there at the beginning is very important. There have been some misunderstandings on the press. We would start with an investigation phase, effectively to try to provide an answer to many of the open questions raised in the report. In the report, we do not confirm, and you have seen it before for this question of soft or hard limits, we do not confirm any design decision. We do not decide on any technology. This would be something that you would do in starting a project. And let's say within a project, one could develop a minimum viable product that would meet both the Eurosystem requirements and most importantly, the needs of prospective users. A key point is that we are disconnecting decision on starting a project from a decision on whether to issue digital euro or not. By having a project, we would be able to provide digital euro in a shorter period of time because we would be better prepared if we were to take a decision to issue a digital euro. But a decision to start a project does not prejudge any decision to issue a digital euro, which is very much, I have not presented here just to stick on these key points, but we define in the report a set of scenarios which could be the ones which would be more likely to trigger this decision of our governing council. And I think with this, I would finish with the next slide, which simply has the reference both to our digital euro report.
We do have a couple of questions. I think one of them you've already discussed, which is a probable CBDC distribution model. The other one is whether there are any plans for the ECB to issue a tokenized CBDC, and if not, why not? Is that something you'd like to take?
I can take. I think on the first one, on the distribution model, it's the one which I tried to answer with the slide on the complement with private initiatives. Yeah. So quite open at this stage. Key point is we want to collaborate with supervised service providers for that. The second question was whether we would consider a tokenized form of central bank money. So we speak in the report of considering both account money, digital euro, and a bearer or tokenized form of digital euro. So we have not yet decided. We may consider just one. We may consider also probably both possibilities, since there are strong complementarities between one another. So no firm decision, but yes, it is one of the possibilities that we would explore in a project.
Thank you very much. That's well, I must say that was a fascinating presentation, Ignacio, and I remember sitting in a lunch actually at the ECB on the top floor of the ECB's tower in Frankfurt. And it was shortly after the Libra announcement, which I think was, it seemed like a long time ago, but I think it was only June 2019. And I must say you've made a tremendous amount of progress in your thinking since then. And I wish you every success with finalizing the design project as you've described it. So thank you for coming to talk to us about that. Now, we could spend a lot more time talking about that, but we must move on to the panel. And the panel is really all about standardization, innovation, and tokenization. And I'd like to introduce Armin Peter. Armin is, as you can see on the screen, the global head of syndicate, head of sustainable banking for EMEA UBS. So far, so good. But what's really important to us at ICMA is that Armin is the chair of our FinTech Advisory Council. So Armin, I'd like to welcome you. Thank you very much for all you do for the FinTech Advisory Council as well. If you would put on your camera as you have and introduce your panelists, please.
Perfect. Thank you very much, Martin, for the introduction. And before I move on to my fellow panelists, who definitely best placed to introduce themselves, I think it's been a very, very interesting presentation that Ignacio is saying. You know, if the ECB is talking about digital money, and the digital euro even so, then I think one does understand, you know, we are not talking about fiction. We're not talking about a fintech vision only. I think it is has become reality, and it's something which it seems like we really transition towards. And I think I'm really pleased to have such a diverse panel this morning with me to discuss, when on the one hand we see cash is changing, what actually happens on the other side of the spectrum, i.e. the digitalization in bond markets, and that all against the backdrop of COVID-19. So with that, I probably would just suggest, Douglas, do you want to start introducing yourself, and then we make the round and we come to the first question.
Thanks, Armin, and thanks to ICMA for the invitation to be here. My name is Douglas Arner. I'm a professor at the University of Hong Kong, and I focus on the intersection of finance, technology, and regulation.
Thank you. Should we go to Shruti, please?
Hi, everybody. I'm Shruti Ajitsaria, and I'm a partner at Allen & Overy. I founded Fuse, which is where we host our legal tech, reg tech, and fintech companies.
Perfect. Thank you very much for that. And Jan, over to you.
Yes, hello, Jan Seysens. I'm working at the European Commission, and I'm heading the Digital Finance Unit at the Commission's Financial Stability and Capital Markets Department.
Very, very pleased to have you this morning, Jan. Thank you. Shrey, over to you.
Thank you, Armin, and thank you for the invitation today. My name is Shrey Kohli. I head up debt primary markets at the London Stock Exchange Group, which is a market which normally sees 1,500 issuers raise over 500 billion every year. I also run LSI's initiatives on digital innovation and capital markets. So fits the topic.
Perfect. Thank you very much. Very exciting to have the stock exchange here represented as well. Makes it very diverse, as you already can see. But last but not least, Jean-Marc.
Hi, Armin. Well, good morning, good afternoon, everyone, and thanks for joining. So I'm Jean-Marc Mercier, Vice Chairman, Capital Markets at HSBC. At HSBC, I'm in charge of Capital Markets Technology Strategy. I'm also ICMA Deputy Chair of the Board.
Thank you very much, Jean-Marc. My name is Armin Peter. You heard it from Martin, and I'm really pleased to have such diverse panel this morning, as I already said. And Douglas, you're the one who flew in from the farthest, because you're in Hong Kong, as we know. But at the same point in time, I think with your background from the region and your daily work, I would be actually interested to give you the first question in way of, how do you see what has happened in the last 12 months? I mean, we just heard Libra was actually in June 2019. We know it very, very well, because that was a FinTech Forum #1 from ICMA. 12 months later, 15 months later, we hear the ECB talking about digital money. So maybe over to you in way of, how you have seen the last 12, 15 months, what has happened, and what do you think actually the pandemic has played a role in this?
Yeah, thanks for that, Armin. And one good thing about traveling is about not traveling is for events like this not having jet lag. It is definitely one of the pleasures of online events. And if I think of all of the things of this crisis that I do not miss jet lag one single bit. So if we think about this current situation, I think it's interesting. If we look at the past 10 years of finance, probably our big trends, the 2008 crisis, massive amounts of post-crisis regulation, and the impact of technology. I think technology had been driving finance for a long period of time, but the past 10 years sort of changed directions. I think what we've seen over the past year has been a reinforcement and a shift in those trends. And I think if we think about first the pandemic itself, if I think more optimistically than Martin, I think the good news is that all of our digital financial infrastructure, it didn't break. This has not been 2008. We had some discontinuities. The officials stepped in with lots of liquidity, but nothing broke. And for me, that's a dramatic improvement for 2020 over 2008. And I think if we're thinking about those crisis issues, now we're looking into some of the money market mutual funds, non-bank financial institutions, and of course, some of the pricing mechanisms in government bond markets in particular, and drives towards safe assets in liquidity conditions. But if we look at the crisis, the big drive has been digitization. We were just talking about CBDCs and payments. One can think about non-face-to-face transactions, remote working. And this is something that I think all of us have seen. And one of the biggest areas where this is impacted, less in debt so far, but equity. If you look at US Chinese equity, absolutely transformational from the impact of liquidity, technology, and day traders. Absolutely crazy things happening in those two sets of markets. And it's something that we have to watch in other markets. Our third is really around RegTech. The fact that everyone is working from home means that we have gotten used to all sorts of compliance and monitoring systems in an entirely different way. The fourth bit is around infrastructure. You know, non-face-to-face has required attention, particularly to AML and digital ID issues, but also lots of work on thinking about how we can build better systems going forward. And of course, finally, from the standpoint of data, obviously concentration issues, but also issues around moving transactions, moving structures to the cloud. And so what I think we've seen is the crisis has driven digitization in finance to entirely new levels to what we've seen before. And that really highlights what we see as the big three trends going forward over the next 10 years. Tech, but not tech from little changes, tech more like Libra and complete transformation, central bank digital currencies. Very different than what we've seen from the standpoint of tech over the past 10 years. Second, sustainability. Sustainability, we are already looking at this, but from the standpoint of financing sustainability, from the standpoint of infrastructure to support sustainability, the crisis has dramatically changed the way that we're looking at things. And finally, it's driven this tension that was already there between globalization and fragmentation. And I think that going forward, this is something that we may see on the geopolitical level, we may see it on the monetary level, we may see it on the financial level. And I think so looking forward, 2020, reinforcing some of those existing trends in digitization of finance, but it has dramatically accelerated all of those trends in a way that we could not have anticipated.
Yeah. I think you bring a good summary in way of what is going on, and it's quite a mouthful, I must say. Maybe Jan, you know, as the head of the digital finance unit at the EC, you're certainly the one who is representing the regulatory side of things. Now we have heard Doug how he sees it from a private side of sector perspective. Yeah, I do hear a lot of trends. Yeah, I would like to ask you how, you know, you at the EC have perceived the last 12 months and how you actually look at the topic of sustainability and technology. Somewhat it goes hand in hand, it appears, but would like to hear your views on this.
Yeah, thanks very much, and thanks for the invitation to the panel today. Indeed, I think, let's say, Darius has set out some of the trends we are seeing, and I think from our side, from the EU side, from the European Commission, I mean, we really see a number of these trends were, of course, they're way before the COVID pandemic situation. I think also from our side, even before that, the current Commission made the digital transformation and making Europe indeed fit for the digital age one of its key priorities. And I think some of the kind of developments mentioned also the discussion around Libra, which has affected the overall perception that was there before. I think all this has really been compounded and accelerated indeed through the Libra, through the pandemic and through the lockdown, of course, or the countermeasures. And we really see also in Europe that indeed not only, of course, on the workplace, on the trading end, but also on the customers end, indeed, much actually positive developments towards actually this digital transition. And I think that's certainly an opportunity we want to kind of seize and let's say accelerate this digital transformation in the financial sector in Europe. And so we have put out in September actually a strategy, the digital finance strategy, where we try from the EU perspective, try to make a proposition where we want Europe to go on this. And I think one of the key, let's say, fundamentals there is indeed that we want and we need to leverage much more indeed on the internal market in Europe, on the fact that we have 27 member states where we can have one legal order for those things, because it is indeed true that while digital is transforming stuff, one thing remains: the finance is a highly regulated sector, and let's say the regulatory side of things needs to actually keep pace with the market developments. Otherwise, at some point, also the market developments won't be able to actually develop anymore as much as they could and should. So I think there are two, if I can mention three quick points from our side, what we're working on. Really, the first one is to make sure that actually all the private projects we're seeing in Europe, that they can really benefit from passporting, from, let's say, a single entry point, common rules in Europe. I think the second one is to make sure that our legal system is clear and certain on this, and that also, let's say, the new innovations we are seeing, that they can be economated. And I think one area where we've made quite good proposals, I think, is in the area of crypto assets, where we also came up with a pilot project for distributed ledger technology and actually issuance in this area, which maybe we can talk about a bit later on. And I think the third area is indeed to make sure that all market participants have common operational resilience systems in place, because it is clear that let's say if the cyber risks are not being addressed by everybody in the system, that will create problems. All of this is we're looking at across the sectors, but we of course see also, as you say, the sustainability as one of the key markets where this can have a great impact. We see this essentially as a positive opportunity. I mean, much of the data, to give this just one example, which is available, can actually help us to let's say steer investment towards more sustainable products. It can help us to assess better sustainability risks, also where they have financial implications for firms. And we are aware indeed that there are also matters of course, new sustainability issues arising through technology, through digitalization. So one of the ways we really want to address this, I think it's a discussion which, for example, we've seen on DLT, on blockchain, and the energy consumption that it has. We have seen it on the use of cloud computing and other matters, to give just two examples. So one of the tools we have, I think, from our side is, as you know, our taxonomy for sustainable finance, where we define from the European perspective what are the standards that need to be met to actually be considered a green investment. And we do think there's quite a lot of potential actually to roll this out also towards these kind of digital activities to again steer investment towards the more energy efficient of these digital technologies and not towards other ones. So that's, I think, in a nutshell what we are looking at, and all of this for us, I think, and that's really consensus on this in Europe, is a joint European undertaking. We'll, as much as the ECB is moving forward on the digital euro together, we do that on the regulatory side for the whole of the internal market.
Jan, I think you definitely convinced any doubters that if there was at any point in time a doubt about the fact that the regulators would not have caught up with what's going on, and that you really mean it when you say, and we heard it from Ignacio before and as well, that you want to collaborate with the private sector. I think all the topics that you were raising certainly just convinced everyone. You mean it when you say it. That's fantastic. Shruti, over to you, because from regulation to law, it's a small step for many. And we just heard how much has been going on. Maybe from your side, on the legal side, what has happened, and do you see as well tokenization being the next step?
Thank you, and thanks for having me. I love being part of this kind of a panel, because it reminds me of the art of the possible and kind of what is going on in the wider world, because the reality of my job is that I'm sort of begging lawyers on a daily basis to make small incremental changes using technology. So it's important, I think, to remind ourselves of what the end game is and how different it is, and the ambition. So thank you very much for having me today. I just wanted to talk a little bit from a lawyer's perspective, because I know we have some lawyers dialed in on this call, and they'll probably be wondering how they fit into this picture. And I think for law firms, it's really important that we start to understand where our part is and what our part is to play, and how we have to evolve in order to be part of the puzzle. So by way of example, our typical way of working isn't to invest proactively in R&D as a law firm, but I think actually more and more we need to be attending conferences like this, understanding what is happening and then being prepared to invest in R&D, sit side by side with the regulators, sit side by side with the startups. And to Jan's point around collaboration, I think collaboration for lawyers needs to start to mean something very different. We need to start participating as active participants in groups and giving our views rather than kind of sitting on the sidelines, because we will be playing such a large part as all of this keeps evolving. On the kind of, from a law firm perspective, in terms of actually moving towards a state where we can use things, what we find is that we have very much a sort of computer says no and these are the rules perspective. And I think the other thing that we need to do is to change our culture to be a bit more brave and a bit more ambitious, and to move away from the computer says no culture into how can we help and how can we support and how can we drive it forward. So those are just some observations on the point that Jan made around collaboration. It's been really interesting for us to see what's going on in the bond market, because as some of you will know, we've hosted Infuse, a company which is able in theory to do end-to-end bond automation. And we saw last year the issuance of a blockchain bond. And I had very much expected that this lockdown period would accelerate that, and that we would see people starting to use those sorts of technologies kind of less as a showcase or a pilot, but more in anger. And that hasn't yet come. And so I think it'll be really interesting for us to watch what the drivers will be for real change. So moving away from what the art of the possible is in theory towards the practical embedding of all of these things into everyday life and business as usual.
Thank you, Shruti. You said very interestingly, it requires an active part, and it needs a change in culture. Certainly, you do reflect that from the perception of a law company. So very well done for this. Maybe that brings me nicely to Shrey, because stock exchanges had a very traditional position within the capital markets infrastructure. What has changed? Has the culture changed? Are you an active part of the development? What is your position nowadays, actually, as a stock exchange?
Right, and thank you so much, Armin. So I think it's more of a mindset change, and Shruti mentioned it very well, that behavioral change in capital markets, particularly at a point in time that we're very busy and all of us are working in a completely new way of working, is tough to bring. I mean, just to answer your question on how busy it's been through the pandemic, I mean, we've seen more than a 25% increase in the amount issued in debt capital markets. The regulatory pipes, to Douglas's points, have worked relatively well. We've been in a situation where companies are not only recapitalizing, but companies and sovereigns are launching very large programs to deal with the impacts of the pandemic. And we've done it in a manner which is totally different to the ways that we've done it before. Not just for frequent issuers, we've done it for new issuers as well. So I think it's been a step change of mindset. As a financial market infrastructure, the question that we always have to solve is not how does the problem fit the technology, but how does the technology fit the problem? And if the one thing that has changed this year has been a much more focus on not the technology, but what is the problem that the technology is trying to solve, which goes to Shruti's point on how user-friendly or how scalable technologies are. So in terms of what businesses like LSEG, and I would say this is true of financial market technology infrastructure providers across the world, are trying to do is, create technology which is scalable, not just which is limited to a particular use case or asset class. Create technology which is open source, open access, open specification rather than proprietary, because people care where their data is. Create technology which is secure because the cybersecurity risks are higher and people value price-sensitive information incredibly strongly given where we operate. And create platforms which are end-to-end, right from origination through negotiation to completion to syndication to lifecycle management. And obviously, given the scale of this, you need to partner with various interesting propositions which are out there, which are solving individual problems, but then add them to sum of parts, which is greater than the individual components. I think that's the challenge that we're facing, and certainly the ethos that we feel financial market infrastructures like LSEG have a role to play in digital innovation.
Trace, thanks for that. A couple of good points in way of, it requires a step change in mindset. And again, the word collaboration, open. Jean-Marc, Shrey just mentioned, issuance volumes are up, and we talk about all these changes to be sustainable tomorrow. Are we trying to fix something which is not broken, or how do you see this?
Well, thanks, Armin, and thank you to Zoom to start with, right? ICMA moved to a larger office earlier this year, but we could not have crammed 470 attendees in a room like this to listen to the panel. And to Douglas, I mean, you would not all travel to London and be jet lagged as well. So clearly it's super useful. To Martin's remarks earlier, I mean, the markets did keep open and are thriving. I mean, back in March, there were some calls to close the markets, and keeping them open enabled companies to, and actually governments, to raise well-needed capital. I mean, year to date, Shrey, you said that bond issuance is actually up 35% globally to a record $5.5 trillion. So, I mean, Armin, I've got three thoughts. I think one, it has been extremely easy, if I may, to work from home. I mean, it's just incredible how fast we all were able to move. I'm sure some of us have struggled with Wi-Fi or with the kids, but globally, I must say, moving from the office to work from home has worked. I think Zoom has certainly helped as well to connect. And the connectivity between the market participants, starting with e-signatures, the ability to actually enter into contracts and transactions and finance and all that, to Shrey's remark, I think it has worked. The second thought is, I totally agree with Doug and others, and Jan as well. I mean, the acceleration. We have seen how e-commerce accelerated earlier this year. I mean, it took 20 years to approach 20% of market share for e-commerce. And in just a few weeks, few months, e-commerce share of the commerce jumped to 30%. So massive. And in capital markets, we saw that. We saw, and it's really a 2020 element, acceleration of technology, the explosion, I call it, of capital markets fintechs. And not just in debt capital markets, it's true as well. Starting to see in leverage finance, loans and ECM. I mean, the last real big change for us in DCM was really around 2000, where book building went online. The bigger theme around this acceleration, biggest themes are platform and the network effect, end-to-end process, of which book building is a massive part. And we start to see post-trade as well come through as a theme. I think it's extremely complex. A bond is still a piece of paper somewhere in a vault. We all like talking about digitalization, but actually a bond is still in a vault. And the third bit is with the acceleration, I think come risks. And for me, the biggest risk, especially as an ICMA board member, our mission is about efficient capital markets. And the biggest risk for me is fragmentation. I mean, if you're old enough, you remember the VHS Betamax moment where we all want to do a video recording, but we have two technologies that don't speak to each other, and it's a disaster. So we cannot afford systems that do not speak to each other, especially the book building platforms. I mean, in Hong Kong, there's ePrime emerging. In Europe, you have the legacy of HSM, IssueNet, and now talking to LiquidNet. In the US, you have direct books emerging. We need these to speak to each other, risk our errors, delayed pricing, exposing issuers and investors to market risks. So I think I welcome actually initiatives, Martin, you mentioned that the initiatives toward common standards, the ISDA ICMA Common Domain Model initiative on what is a bond. Today it's very much on repo and secondary, but what is a bond? On its thousands of parameters. I welcome the ECB DIM, the Debt Issuance Market Working Group efforts that are ongoing. I welcome another one like the WEF in Davos, the DLT project. I mean, there's a lot to do and we could spend hours on that.
Perfect. Jean-Marc, thanks for that. And You pointed out market fragmentation as one of the risks. Jan, I would be interested actually. You mentioned cross-border passporting as one of the points during your remarks. What other risks can you see? Is it market fragmentation one of the key points that you have on the agenda, or what are the key pillars and priorities that you try to address with the digital finance package?
Yeah, no, absolutely. I mean, and it is a key issue, the fragmentation risks. And I would say in Europe, I mean, they on the one hand, the risks are relatively big because we have many small countries. So I mean, if you fragment or smaller operators, if you fragment along the national lines, or if you fragment along, let's say, different market segments, of course, then the impact is even higher. On the other hand, I think we have also the opportunity, indeed, that we can set standards for our markets and for our countries together. Now, I think, let's say, the real challenge on this point is where does the regulator need to come in, and where is that not advisable? And I think we don't think that the regulator can solve everything. That's why, indeed, I think also what you mentioned before, indeed, the various ICMA initiatives or other standardization efforts in the markets are something which I think for many issues are much more appropriate. So I think we need from the European side, we want to create a framework for that. So I think some things, at some point, the standardization achieves its limits, basically. So if you have, let's say, if you have different supervisors who each of them sets different standards, it's simply quite difficult for the market to actually to take on the standardization. So what we want to try to achieve is that, indeed, that the framework, at least within Europe, is the same for everybody, that the rules are the same. I think one area where this is quite felt these days is digital identification, onboarding. Not, let's say, less relevant probably for many of your segments, but I think overall in the fintech area, a key issue where we have hugely fragmented rules. So we will come up with common rules on that. I think another point which was mentioned is generally RegTech. So we are looking into how you can build schemes where, indeed, also on this area, you can have, let's say, mutual approaches, common standards, which operators can look at and abide by. So those, I think, are just a couple of examples which how we're trying to forward this. And last but not least, I think we are continuing to building in the European sphere, let's say, moving towards a bit of a single point of entry, a common, let's say, also a structure for new firms, actually. But indeed also for existing both tech providers and for market operators, and that's something which would also, of course, provide added value. I mean, we will not create the single telephone number for Europe, which in a different context some politicians have been speaking about a long time ago, but certainly a clear, let's say, picture of who is the regulator or supervisor we need to talk to. So I think those are different elements how we're trying to address this fragmentation point in Europe.
Perfect. Thanks, Jan. I see Douglas as actually, going the head up and down, yeah, because I think Jan is just repeating many of the points which initially you were saying. But the point of fragmentation,
Sorry for that. There's too much agreement here.
Not every continent has to deal with the setup of EU and come to common terms, yeah, of 27 countries. But Doug, how do you handle that actually in APAC, yeah, in terms of market fragmentation? And the point about standardization, what do you see in your region, how to deal with this open system and the desire of making sure that we are not fragmenting markets?
Yeah, I mean, I very much agree with Jean-Marc and Jan. This issue of fragmentation, I think, is one that is going to be a challenge. And it's interesting that one of the things that we've definitely seen accelerating is the development of, in particular, Chinese, but also Eurozone debt capital markets. Both of these two, certainly the sustainability bond initiative in the EU, in the context of China, the development of, in particular, the connect infrastructure, et cetera, is making a very different sort of world than we were in a few years ago from almost equal sizes. From the standpoint of APEC, the reality is that, particularly compared to Europe, it just is a fragmented market. You know, we've spent a lot of time over the past 20 years since the Asian financial crisis talking about trying to develop regional bond markets. And everyone has developed markets that are reasonably functional. The Chinese markets are now immense. And one thing that I think is interesting right now is a process of going through defaults. And that's going to have a real impact on the way those markets go forward. But I think what is really interesting from the Chinese market standpoint is the fact that digital has been at the core since the very beginning. If we think about the way that the interbank bond market operates, and of course, that's the central sort of institutional wholesale market, it's very much a centralized digital system. And I think that's something that, as other countries, it's going to be interesting if you think of the EU bond offerings combined with the CMU process, combined with the digital finance strategy, there's an opportunity to think about building a similar sort of system there. And so I think that's something, if we look actually at US government markets, there's been a process in recent years of sort of centralization instead of decentralization. And so I think that's interesting from the trading infrastructure standpoint for the major government bond.
Thank you. Thanks, Doug. Shrey, did you want to say something? You raised your hand to the point of what Doug was just saying.
I mean, I think just very quickly. So Jean-Marc made the point around it being VHS versus Betamax at this point in time. I might not have that long a memory, Jean-Marc, but it certainly feels like the early days of the internet, where there is a proliferation of apps which are solving different problems for the market right now. And I mean, to be honest, there's so many different problems to be solved, and there's expertise which is highly specialized, that it's inevitable that there will be multiple projects offering consortium which are out there. But I think the important point about the metaphor of the internet is that, you know, the internet had the base layer of HTML to support the development of the apps. I think if ICMA is thinking of standardization, ICMA should really think in terms of the role it has in primary markets of what is the base layer of the technology that's trying to solve these problems, whether it's legal, how contracts are parameterized, whether it's, you know, machine reading of documents, how documents are passed, whether it's settlement, and then number of initiatives which are out there. I mean, Elside as a business has invested in a few fintech firms, one of which was incubated by A&O Fuse, which is looking at solving the origination of bonds in capital markets. But we've also invested in initiatives which are looking at democratization of distribution to retail finance. So I think what's very important in terms of standardization is, you know, fragmentation is not bad because it leads to good competition, but fragmentation is bad when it creates different ecosystems. And you want the base layer to be a common one.
Got it. Shruti, you wanted to comment, I think, beforehand on Doug's remarks, but at the same point in time, I probably have a next question for you. So, Shruti, over to you.
I mean, I was just going to ask the question of the audience, really, which is we talk a lot about the fragmentation. Whose responsibility do you think it is to drive who the winners in the pack should be? Because what we're seeing, at least from a law firm perspective, is lots of the banks entering into consortiums and collaborating, but with lots of different players. And so it's not really helping the fragmentation problem because it's not pushing one particular player any further forward than the rest. And so I suppose a challenge to this group and a question to this group is, whose responsibility is it to help identify who the best player should be?
I think this is the disadvantage of a virtual meeting, 470 people watching, in way of you can't necessarily cast the vote. In a live scenario, at least we could raise hands. But you know, I invite everyone actually to answer to that question to ICMA, the email address you have. And it would be interesting to hear your comments on those points. I'm pretty sure Jan hopes it's not all him to the remarks of what he said earlier on. Jean-Marc, sorry, you wanted to say something before I...
No, it's Shruti has a great point. I mean, it's extremely difficult to pick winners, and somehow we all want to go with the best solution. And sometimes actually the winner is really the one company in that particular use case that manages to create that platform effect, the network, right? So, It may not be the best solution technology-wise, but actually it works. And that's why it's so difficult to dislodge incumbents, because it works. I mean, we had this ECB at the first meeting, one investor said, well, you know what? It works as a start, right? And we all know
to the point,
it's
you
not,
don't need to change what's not broken.
Yeah, right, exactly. But it could be faster, less risk, you know, and all that kind of good stuff. And it's still extremely manual and full of errors, right? So we all know the use case.
Yeah, very much. So sorry, Shrey, you were trying to make a point, I guess.
I mean, it's a really good question to answer. And I mean, I think it's a combination of the market, as in what really solves problems. And as Jean-Marc said, you know, a combination of what environment, you know, enables such initiatives to thrive. So we operate in a regulatory environment in Europe. Businesses like the London Stock Exchange Group are highly regulated markets. Participants like, you know, HSBC and UBS and ANO are regulated in their own manner. What you do need is an environment where you're assured that what you do right now, you still do within your regulatory permissions, but you do know what in a much more efficient manner in the future, right? And second, that the data is secure and there's no single point of failure. And now that's interesting for me to say as a financial market, as someone who works in a financial market infrastructure business. But the reality is that, you know, data is, I mean, it comes from the various different participants which are participating in a transaction chain. And, you know, it doesn't work if the book building process is not connected to the origination process, because again, you're replicating processes which recycle the same data. So yeah, I mean, at the end of the day, Jean-Marc is right. What will work is those initiatives which solve problems, and, you know, ultimately initiatives which in the market develop traction within a regulatory framework.
Yeah. Just conscious of time, we only have 2 minutes left. Maybe the question to all of you in a way, and please, very brief, where do you see the biggest risk? At the same point, you know, what do you feel the next step needs to be? And probably I ask Douglas first. So risk, and what is the next step?
You know, I think the biggest risk comes from over concentration in platforms. And this is something that we're trying to address in a variety of different ways. If I wanted to think about where I think the most exciting potential comes from, it actually comes from this idea of the central bank digital currencies, the potential ability to embed directly a monetary or a payment instrument into transaction structures, which has the potential to eliminate one of our major underlying risks and dramatically improve on post-trade processing.
Perfect, thank you very much. And passing it on to Jan.
Yeah, I think a big, now I don't want to be getting superlatives, but a big risk is certainly that that regulators and supervisors don't keep pace, because if they do, I have confidence that they can manage, but if they're not sufficiently quick, so that's something we are trying really to address also through innovative tools like pilot projects and together with our supervisors. So that's for me the biggest risk. And the next steps, I think, are indeed to we have on the regulatory side a good, let's say, good projects and good, I think, good lines in general terms, and they are also, I think, agreed internationally. There's broad consensus on certain directions of travel, so they need to be implemented and broken down to specific and made real. Basically, I think that's the next steps indeed.
Thanks, Jan. And again, a small step then to the legal side, Shruti.
I would actually agree with Jan. I was just thinking, you know, to me the biggest risk is there's stuff out there and the theory is moving, but we need to also move culture and we need to adopt things. So CDM being a really good example, you know, we need the practical reality to catch up with what is possible. And to me, the most exciting thing is all of the things that we're discussing will ultimately lead to increased efficiency and decreased risk. And so I just like to think about how I'm going to spend all my spare time.
Perfect. Thank you very much for that. And Shrey, over to you.
So in terms of risks, I think there's a risk that the market expects a revolution to happen now. But the reality is, as Shruti made a point, cultural change takes time to make. right? Which kind of brings you to the next step, which is, if you cast back to the internet was an evolution over a period of time, because before it became what it became today. I don't think we'll see, 2021 being a watershed year for, revolutionary change within primary debt capital markets, for example, but it will be a longer process. So I think in terms of, what we're trying to do is engage with the market community to create a scalable ecosystem which is secure. And hopefully it'll be one of the apps and systems which is used in the markets of the future.
Perfect. Jean-Marc, risk and next steps.
I mean, we discussed fragmentation, so I won't come back. I think that's a current risk. It may not happen. The next step for me is, well, let's embrace technology and transform the debt markets, right? We need to help issuers and investors, to raise and invest their capital in an efficient manner. Again, the ICMA hat for a second. So I think 2020, we see it happen. Now we need to do it. It's not yet done, right? As Shrey would know, we just about to see the transformation, I think, in 2021.
Thanks, Jean-Marc. And I think, in the end, it's a transitional process. To make it sustainable, it's quite interesting. But first of all, I think, like today, 470 on watching what we were talking about is clear engagement. Cultural change needs to happen. And I think I take it by Jan's word, actually. It's all on us, actually, to make sure that we keep pace, that we not make the wrong decisions in some way, and that suddenly cause unintended consequences. So with that in mind, I say thank you very much for zooming in, so to say. Thank you very much to my panelists, and to the final words, over to Martin.
Thank you very much, Armin. I thought that was a fabulous panel. Thank you very much to all the panelists. Very thoughtful, very insightful indeed. And I think there are a few things that come out there. One is, it is an absolute priority for ICMA, and thank you, Jean-Marc, and thank you to Armin for all the work that you're doing for us, and we will continue to push this agenda forward as quickly as we can. But I think we can see from the panel that there's a real dynamism here in terms of fintech development. There is this step change that a number of people have referred to. Interoperability is absolutely critical. Fragmentation was mentioned many, many times. And also the need to identify the problems that technology can solve and not the other way around. And I think embedding, as I think Shruti mentioned it, there are plenty of pilots out there, but what's absolutely key is to embed some of these pilots into the real world. We all know that the capital markets are incredibly important in terms of intermediating capital, never more so than in the financial crisis we find ourselves at the moment. Technology has a huge role to play in that, and we need to make sure that we continue the development and use this opportunity from COVID-19 as the accelerant it is in fintech. And with that, thank you very much again to Ignacio, to all of our panelists. Thank you very much, everybody, for joining.